Bitcoin, Ether, XRP, Solana, Cardano. Just those 5 tokens account for 90% of the investable crypto market capitalization. In equity markets, this is like the Mag 5 for crypto. Crypto investing is growing up and changing.
It's great to see the progress that's being made. It's certainly been night and day compared to how things were over the past 4 years.
Yeah, absolutely.
This episode is brought to you by VeChain. VeChain is one of the top layer 1 enterprise blockchains in the crypto asset class, and they are getting adoption by many big brands and companies around the world who are building Web3 and decentralized application technologies. I've been a VET token holder for many years. In fact, I started investing in VeChain back in 2018, and some of the key features of the VeChain blockchain includes it's secure, affordable, scalable, fast, and sustainable. Some of the companies and brands working with VeChain include Givenchy, Walmart China, BMW, Boston Consulting Group, and many more. Most recently, they partnered with Dana White in the UFC, and Dana White even said recently that he purchased over $1 million of the VET token. And VeChain also recently launched staking, where you can stake the VET token and earn great rewards. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me is Zach Pandl, who is the head of research at Grayscale. Zach, it's great to have you back on.
Tony, great to see you. Great to be on again.
Yeah, Zach, we are recording this on Friday, September 19th, a day after big news of the SEC approving the Grayscale Digital Large Cap Fund. I'm ready to dive into that and much more. Maybe let's kick it off with that. Tell us about this fund, what it encompasses, and I know the SEC had delayed certain things in the past, but now we have the approval.
Yeah, great place to start. Big news for Grayscale. But let's take a kind of step back and talk about where we are for crypto. Crypto investing is growing up and changing. We are broadening the access to crypto to a much wider range of investors than touched the asset class before. Many investors see the value in innovative technology and the sort of scarcity of these digital assets in a time when valuations for many traditional assets are challenged, and we have new macro risks, stagflation risks, maybe downside risk to the US dollar. So investors are thinking hard about how to build a portfolio of assets that works for them over time. And many investors are drawn to the crypto asset class for exactly those reasons. At the same time, you're a crypto expert, Grayscale. We're crypto experts here. The crypto asset class and blockchain technology has a lot of complexity to it. And so while investors want to allocate to crypto, they also sometimes become overwhelmed by the number of choices. And that's why we're so excited to be able to bring this product to market as an exchange-traded product or ETP. The Grayscale CoinDesk Crypto 5 ETF product will give investors systematic access to the top 5 crypto assets by market cap in a way that will automatically rebalance over time. So as you know, many investors, when they allocate to stocks or they allocate to bonds, they don't want to be a stock picker or a bond picker. They just want exposure to the asset class, index-like beta exposure to the asset class. And that's what the Crypto 5 ETF product will be able to do for investors in the crypto asset class. They can incorporate these assets into their portfolio without having to worry about picking the right tokens or rebalancing over time. An index approach for crypto can work just as well as index investing in all other asset classes, and that's really what this product is designed to do. So we are thrilled to be able to offer that solution to investors, and we think it's going to be a great fit for many of our clients.
I love it. It's something I've been talking about for a long time that, the S&P 500, the NASDAQ, the Dow Jones, these are top performing indexes and you get the basket, right? And a lot of people,
Exactly.
to your point, they don't have the time to go through individual stocks or individual crypto, but they want exposure. They want to get exposure to the asset class. So this is really great. And the top 5 makes sense. The most liquid assets, by market cap, they're up there. So this is a great product. And I think a lot of folks will definitely want to invest in it.
Yeah, absolutely. Just building on that thought, for the stock market, there's many companies with modest market cap, or so something like the S&P 500, 500 individual stocks is a great way to get that broad exposure. But the crypto asset class is very top heavy, and there are some natural reasons for that, given the nature of the technology. So holding just the top five tokens actually gets you 90% of the investable market cap of the crypto asset class. So although it's only five tokens, you're getting sufficient exposure, I think, to the breadth of the technology. And investors are not going to miss something big that comes along. If a new project, a new blockchain is emerging and growing in market capitalization, the index will automatically rebalance to give investors that exposure. So you're starting with today's top five tokens by market cap. Some of them, the symbols are on the pillows behind you, but Bitcoin, Ether, XRP, Solana, and Cardano. That's what the product starts with today, those top five tokens. But as the industry changes, the index will automatically rebalance to incorporate new market leaders.
Now, to confirm, this is an ETF. Is it a spot ETF? Break it down for us, because I know there's a lot of spot ETF, individual spot ETF applications in play.
Yeah, it's a very simple product. It's an ETF. The regulators like us to call it ETP, exchange traded product, but the term of art widely used in the industry is ETF. So I think we can use them interchangeably. Yeah, so the Crypto 5 ETF just holds the underlying spot exposures of the token. It's not using derivatives or anything else. It's just giving investors direct exposure to the tokens, to Bitcoin, to Ether, to XRP, to Solana, in Cardano at the moment in a market capitalization weighted fashion. And as those market capitalizations move around, as there's underperformance and outperformance of certain tokens, the index will automatically buy and sell the appropriate amount of Bitcoin, Ether, etc., to give investors that same market capitalization weighted exposure as it rebalances over time. So it's a very simple structure. But I think will be a very effective solution for investors. We see Grayscale is out in the world talking to investors every single day about investing in the crypto asset class, and I can't tell you how many times we have been asked just for exactly this product. Now, we have been running this fund since 2018, but we weren't able until this week to offer it as an ETP or ETF product. And so that's really the breakthrough, giving investors this exposure in the most efficient product structure, ETP product structure, which is so popular among investors. That's really the key, the win here, and why it's going to be such a great solution.
And where can folks access this? Is it simply how they've accessed ETFs and all these, like,
Absolutely.
on platforms like Robinhood or whatever it may be?
Yeah, anywhere that you already access your investment accounts, the ticker is GDLC for the Grayscale CoinDesk Crypto 5 ETF, and you can find that in all the usual places. So all you have to remember is the ticker, and go check it out there. Of course, the normal disclosures apply. Crypto investing involves a risk. Investors should do their own homework, but when investors are ready to make a crypto allocation to their portfolio in the context of a diversified portfolio, this single fund can give you a great place to begin, getting you 90% of the market cap of the crypto asset class just in a single product. It's going to be a great one-stop shop solution for investors that are trying to build crypto into their investments.
This feels like a very monumental moment, especially, with everything that we've experienced over the past 4 years and the roadblocks and delays. But we have this basket ETF, so to speak, where people can get exposure. What can you tell us about the SEC and their previous pausing and delays? But now it seems they've gotten their act together, so to speak, and they're getting these things approved.
Well, we have had a great productive dialogue with regulators for a long time here at Grayscale. And, for your listeners who have followed this journey over a long time will know that, we have been really at the front lines of trying to offer efficient access to crypto investing to US-based investors. In fact, we first filed for a Bitcoin ETF product all the way back in 2013, if you can believe it, a long time ago in kind of crypto market terms. We finally were able to bring that product to market in January of 2024. And since that time, I would say the speed of approval and the process of bringing regulatory clarity for the crypto industry in the United States has only been accelerating. The Trump administration came into office with really a mandate from voters to bring regulatory clarity to the crypto industry here in the U.S. to give investors, safe and efficient access to crypto assets, and to ensure that people operating in the space, developers, businesses operating crypto, knew that they had a safe future here in the U.S. And I think the Trump administration really has delivered on that. And largely, those efforts have had bipartisan support. We saw the Genius Act, for example, stablecoin legislation in July pass with bipartisan support. So it's clear that it's this, sees a across the aisle effort to help bring regulatory clarity to our industry here. And SEC approval of crypto investing products, while it's very important for crypto, are very important for Grayscale, excuse me, are just one element of that process. So it's great to see this change. It's been a long time coming. We think that this type of product will be a great fit for so many investors, and we're thrilled to be able to introduce it as an ETF this week.
Yeah, and in addition to your approval, I saw the SEC also introduce an accelerated basis of new listing standards to help speed up the approval of crypto ETPs and to get them listed. What are your thoughts on that? It sounds like it's going to make it easy for Grayscale and other players as well.
Yeah, that's right. Maybe again, kind of taking a step back. Investors want to incorporate crypto assets into their traditional investment accounts, a retirement account, a brokerage account, this sort of thing. Tax advantage type accounts that they can be held for the long run. And over the last couple of years, it's taken quite a lot of effort, but we've been able to offer Bitcoin and Ethereum ETPs in that structure. Essentially, what this news means is that the SEC, other regulators, are not going to have to look at every single crypto token on an individual basis and decide, whether it should or should not be authorized to be available in an ETP structure for investors in their retirement accounts, for example. Instead, the SEC is going to give us a generic set of criteria. And these are technical criteria related to the listing of these assets on certain qualified spot and futures exchanges. Those details are not terribly important for people to know. But what it means is that for investors, is that the range of crypto assets that's available to choose from in the efficient ETP wrapper is going to increase quite significantly. So it began with Bitcoin, followed shortly thereafter by Ethereum, and investors should anticipate a significant expansion in the number of other crypto assets that meet these new criteria and that are available into the ETP wrapper. So fundamentally, this is about regulatory clarity on the one hand and increasing consumer choice on the other. And Grayscale is delighted to be part of that process and offer some of these product to investors, hopefully in the not too distant future.
Yeah, it's great to see the progress that's being made, and it's certainly been night and day compared to how things were 4 years ago or over the past 4 years. With the approval of this, GDLC ETF, which includes the top 5 assets, there's the individual applications in play, like the XRP and Solana spot ETFs, and those seem to have the highest probability of getting approved because they have the futures markets, which the SEC has required for Bitcoin and Ethereum. So is this an indication that, the approval of those individual asset ETFs are right around the corner?
Well, I want to give regulators the appropriate time to make all those decisions, but I think investors should, if they want to look at those criteria, can evaluate, which ones are more likely than others as a general matter. The highest market capitalization tokens with the most liquidity, with the broadest range of listings and product availability, as you mentioned, things like futures products, will be the next in line to be available for ETPs. That being said, I do want to go back to the Crypto 5 product in this context. Consumer choice is going to increase a lot, and we would love for investors to have the opportunity to buy a Solana ETP, for example. And I think that those types of products will be very popular. At the same time, many traditional investors are, not that interested in picking all the different tokens in the same way that they don't necessarily want to pick all the individual stocks. Of course, there is some of that, and there will be a lot of demand for these individual exposures. But in my view, the diversified exposure, just like index investing in other asset classes is so popular, I think that the index exposure, diversified exposure will be just a natural place to start, even as we see a significant increase in the number of single token ETP products. So the investors will have that choice. They can buy any single token they want, but they will also have the choice to buy a diversified index-based, automatically rebalancing fund. And in my personal view, having spoken to so many investors over the last couple of years, that index approach will be very popular for investors and give them some exposure to each of these tokens without having to manage all the positions for themselves.
Are there plans down the road? I know this is very early to have this conversation with the approval that just happened, but to expand this from top 5 to top 10 and eventually top 20, and maybe you have different versions, right? It's GDLC 5, GDLC 10, GDLC 20, things like that.
Yeah, I think top 5 is actually the sweet spot in my view. Grayscale is always thinking about product innovation, of course, and you'll see much more from us over the coming years. But for getting this basic crypto exposure into your portfolio, capturing a sufficient beta in the asset class over time, in my view, a top 5 selection is about the sweet spot. Just those 5 tokens account for 90% of the investable crypto market capitalization. So you can add additional things to that over time, but they become diminishingly small. Blockchains are networks, and they're dominated by network effects. And in those types of industries, whether it's blockchains or something like social media, what you tend to find is dominance by a small number of large players. And I actually think that this will be a feature of our industry over time. Even as it grows up more and more, and there's constant innovation, there will be a small number of large market leaders that capture the lion's share of market cap. And for that reason, the Crypto 5 approach, in my view, does get investors very efficient access to the asset class. You can think of it as we have a Mag 7, Magnificent 7 in equity markets. This is like the Mag 5 for crypto. It's really the large players capturing, the mega cap names in crypto and giving investors sufficient exposure to this type of technological innovation. And in my personal view, going beyond 5 is probably going to experience diminishing marginal returns. So we've been thoughtful about structuring the product in this way with those thoughts in mind. And I think a top 5 approach is about the sweet spot for the crypto asset class.
Yeah, that definitely makes sense. Um, Zach, something else a lot of people are waiting for from the SEC's approval of staking in the Ethereum spot ETFs. So, a couple questions here. There was a report that came out yesterday from Arkham that Grayscale moved some ETH. I know this is just on-chain data, and they were saying possibly you guys were preparing for approval of staking in the spot ETFs. Do you think that's around the corner, and are you preparing for that?
Well, I can't verify that particular press report, but I can tell you that Grayscale has been preparing for staking in its investment products for many years. So we are absolutely ready to offer that to investors when we have approval. Let me take a step back and clarify what that staking even means. Crypto assets can be put to work. Can be put to work to get increasing rewards for investors and providing a service to the blockchain, helping run the blockchain. Essentially, that's what staking is all about. Provides a reward to investors. And so the tokens that already sit in these investment products, in these ETP products, can be put to work, can help in the process of running the blockchain, and that'll provide additional rewards in what we call those staking rewards back to end investors. And so the price return and the price volatility of the Ether token, of the Ethereum network, for example, will still be the dominant consideration for investors. We can add a couple of percent potentially to investors' total return through those staking rewards. So it's a process of helping operate the blockchain and earning rewards in exchange. And absolutely, investors will be interested in this, and Grayscale is ready to offer that to investors as soon as we have approval. And we anticipate that will be happening in the not too distant future, that investors can anticipate staking in US listed ETPs. And again, I think that will drive additional investor interest.
So how does the staking component fit with the top five, the GDLC ETF? Will the rewards be in that, or more so on the single asset ETF?
Investors should anticipate staking to begin on the single asset ETPs. There's, of course, a lot of change happening in crypto and a lot of product innovation. Bringing the Bitcoin ETPs to market in 2024 was a huge step forward, and has really began the ball moving in terms of all this change happening throughout the industry. And the products are getting more and more efficient every day. More consumer choice, more efficient products, better solutions for investors building portfolios, and eventually we will touch all those elements. Staking in all the products that can have them. But investors should anticipate that beginning in the single asset ETPs over the coming months, and eventually incorporated in all the products where it is appropriate. Of course, Bitcoin doesn't have that feature, but all the products where staking is potentially a source of additional return for investors, we expect that will be included over time.
Yeah, so I'm assuming, to your point, down the line we're going to see Solana and Cardano eventually jump on that train as the SEC approves these things.
Yeah, fingers crossed. Grayscale has been in the business for a long time of providing U.S. investors, safe, reliable, regulated access to crypto products in traditional investment accounts. And we work cooperatively with regulators in order to bring these products to market. And so as the regulatory picture changes in the U.S., as we get more and more clarity from the bipartisan group of lawmakers and regulators that are working on these issues, we will bring additional products to market. And our investors already ask for these things. So we know that there is demand for these exposures, and we're eager to bring those to products as soon as regulators give us the green light. And we, again, work cooperatively with them every day to help them understand these products, the risks involved, and when it's appropriate to offer them to investors.
Do you think, and are you guys thinking about this, we will eventually have ETFs for tokenized assets? I don't know if it makes sense because let's say folks are tokenizing stocks and certain equities. They already exist in the market. Do you necessarily need to have them in an ETF? Or is there another opportunity there, kind of the index aspect? Well, I can get the Mag 7 tokenized, and that those tokenized assets are being worked on or put to work in DeFi. So that's the additional benefit of holding the ETF for them.
It's a great question. Investors can think of the crypto ETPs, like the Bitcoin ETPs, as a way to build a bridge from the world of crypto back to traditional finance by putting Bitcoin in these ETP wrappers, giving them access to traditional investors in traditional accounts. Tokenization, in some ways, is building a bridge in the other direction. It's taking traditional assets, stocks, bonds, real estate, maybe even a traditional ETF or an index exposure like the Mag 7 that you mentioned, and bridging them back to the world of crypto, putting these assets on chain. And there's advantages to both approaches. Fundamentally, I think how investors should think about tokenization is a kind of back office innovation in how our capital markets function. How you and me interact with our investments in the future is going to be not all that different than it is today. We're going to have a web page where our brokerage accounts are sitting, and we go and can manage our assets. The difference is that in the future, when we are trading an asset, exchanging an asset, borrowing and lending potentially, that something different is going to be happening behind the scenes. Instead of those transactions taking place on the balance sheet of some kind of intermediary, they'll be taking place in a decentralized way on a blockchain. And the benefit to users will be things like 24/7 trading, instant settlement, global access, potentially integration with other DeFi applications that you mentioned. So our experience as users is going to be very similar. We're going to be buying and selling assets that we want exposure to as we construct a portfolio. But tokenization, blockchain innovation is going to upgrade the sort of back office of our capital markets infrastructure to provide user benefits. And there's lots of specific ways that that's going to happen, but I think that that's fundamentally how investors should think about the process. And that's great. We just want to see a more efficient, more effective capital markets and financial system. And tokenization is one part of that future vision.
And on the other side of the coin, you have digital asset treasury companies, a lot of them buying crypto assets. And this trend continues to grow a lot. It started with Bitcoin with Michael Saylor and Strategy. It has now moved to Ethereum, Solana, and other assets. Does it make first? What are your thoughts on that? And does it make sense to create ETFs around these companies where you have their respective stocks in an ETF? Maybe it's Solana treasury companies, Ethereum treasury companies, that type of thing.
Yeah, also a great question. Again, I would think of digital asset treasuries. So what are these things? First, digital asset treasuries, DATs. These are just public companies that put crypto assets on their balance sheet, and they therefore serve as an access vehicle to equity market investors that are trying to get crypto exposure. So I mentioned that ETFs or ETPs can be thought of as a bridge from the world of crypto back to the world of traditional finance. You can think of digital asset treasuries or DATs as another type of bridge, and I would consider them complementary to the ETFs. What we find is that many investors just want to invest in public equity markets. That is the scope of their mandate, that they work within the confines of public equity markets, but they want crypto exposures. And so there are listed crypto companies, crypto industry players that have public shares that are an option. We have lots of Bitcoin miners, for example, and that's been an option for public equity market investors for a while. But really, they want a broader range of tokens in a public equity structure. So DATs are that solution. Can those things be put into an ETF structure, to your question? Absolutely. And in fact, Grayscale offers a product along those lines. So we have a product ticker BCOR, B Core, the Bitcoin Adopters ETF. And this is a basket of companies that have significant amounts of Bitcoin on their balance sheet. And so if investors, they don't want to go select the individual Bitcoin DATs, we can put them in an ETF wrapper, and you can get a diversified exposure to those types of names. So all of these innovations are possible, where there's investor demand, and we offer something exactly like that. But the underlying point that I would try to make is it's all about building bridges. The crypto or the blockchain-based financial system is truly distinct than our traditional intermediated financial system. And we need all these tools to build bridges between them, ETFs, DATs, tokenized assets. These are all different ways to build bridges between these two worlds of finance. And as crypto is growing up, the size and quality of all those bridges is getting improved. And we should expect, investors should expect that to continue over time. More ETFs, more tokenized assets, potentially even more DATs.
Yeah, for sure. It's amazing how the ecosystem is growing and all these new avenues. The other one I was going to ask you about is publicly traded crypto companies. So this year We had Circle, Bullish, Gemini just last week. I think eToro and a bunch of others. Do you already have one, or are you planning to launch an ETF for these publicly traded crypto companies?
Well, I can't just say specifically about those types of future product plans, but I would say again, investor choice increasing is a great sign. And maybe I would call out a Circle as a great example of the kind of thing that is so welcome from for investors. Investors are excited about stable coins. Stable coins are, to date, the killer app of smart contracts. Smart contracts are a fundamental idea from computer science that sort of, as you well know, as your listeners know, is a kind of building block of decentralized finance. It's the kind of foundational idea that allows us to build this rich ecosystem of financial activities on top of a blockchain. And today, stable coins, or digital dollars on the blockchain, are the killer app of smart contract based technology. So investors are aware that they can see all the growth, all the activity in stablecoins, but until very recently, they didn't have a public company that they could invest in to get that exposure. And so the Circle being listed on U.S. markets was very well received by investors because mainstream investors are aware of the stablecoin story already. They just didn't have a way to get portfolio exposure to that. And so, yes, these IPOs help increase that investor choice, which is a great thing to see. And then, Ethereum is another way to get stablecoin type exposure. Circle is kind of like, compared to our digital payment system today, Circle is kind of like the bank, and Ethereum is kind of like where the transactions are processed, the equivalent of the kind of credit card networks today. And so for investors that want to get stablecoin type exposure in a portfolio, a combination of a listed public company like a Circle and a blockchain token like Ethereum, that's a great way to start building those things in a portfolio. So the investor choice has been increasing for important themes like stablecoins. It's exactly what we want to see at Grayscale.
Yeah, it's so exciting, Zach. I mean, I know I mentioned earlier about, the last 4 years, and crypto's really matured and come a far way. And it seems like there's this convergence with TradFi companies going public, TradFi institutions like BlackRock and others tokenizing, launching different products. And the banks are not saying they want to launch stable coins and crypto trading. It's amazing how far we've come.
We have come a far way, but I would just emphasize that there is still a great deal of ground still to cover. So we've made a lot of distance, but in my view, the progress is still very small compared to the ultimate vision. The goal here is that blockchain-based finance is going to really transform the way our financial system and the way our capital markets work. These are innovations in digital money and digital finance that will be foundational for everything in finance in the future. So yes, we've made a lot of progress. The crypto asset class has come from almost nowhere 10 years ago to a $4 trillion asset class. That is a lot of growth, and it's bringing a lot of real benefits to users. But my vision for the asset class and for the adoption of technology is much higher than where it is today. So I think we have a 10, 15, 20-year journey ahead of us. And I think, Tony, we're going to have a lot of these conversations and look back even to this year and say, remember how early that was? These felt like big breakthroughs in 2025. But in my view, kind of looking back with that 10, 15, 20-year perspective, it will look like just the beginning for what we're trying to accomplish with blockchain-based technology and the crypto asset class.
Yeah, well said. And this year, certainly a lot of landmark moments with the Genius Act passing. We have the Clarity Act coming up for vote this fall. And I'm sure, I would love to get your thoughts on this, that once that passes, it's going to unlock a ton of innovation and building because people will have, as the bill is rightly named, clarity.
That's exactly right. The comparison that we like to make is sort of to the internet itself. Think back to where the internet was, say, in the mid 1990s. We were past the very beginning of the story where it was just about technologists and hobbyists, trying something new. And there was a big increase in the big improvement in the user experience, Mosaic browser and other things that made it a lot easier for the average person to get online and greatly increased adoption. And so we saw a big acceleration at that time as the user experience was improving, the applications were improving, et cetera. I would think that crypto is kind of at that place today. We're past the very beginning of the story where it's just about, cryptographers and other specialists that were building the early parts of this technology. And we're already bringing value to many people around the world today, of course. But we're seeing an acceleration in the improvement of the user experience and regulation. The financial markets regulation is an important element to that. To see the full vision achieved for the crypto asset class, we need to make sure that it is, these technologies and these investment products are safe for consumers and safe for the financial system as a whole. And that's what we're seeing now. As you mentioned, the Genius Act, uh, bipartisan legislation on stablecoins, passed by the US Congress and signed by the president in July of this year. And now Congress is taking up what people in crypto call market structure legislation. This is a mammoth piece of financial services legislation akin to things like, Dodd-Frank or Sarbanes-Oxley for your listeners that are familiar with some of these things. Once every 10 years or so, the U.S. Congress takes up a big piece of financial services legislation, and that's what we're seeing work its way through the Senate now for crypto. And why this is so important is just to build that foundation for future growth. We need clear regulatory structure in the most important economy, the most important capital market system, which is the United States, in order to achieve the full vision. And encouragingly, Congress is working on that right now. And the U.S. will be a leader in this process. Once the U.S., the most important market and financial system, lays down these types of rules, it will be duplicated in many places around the world. So kind of opening up global access to the assets and adoption of the technology all around the world. And that's what will help drive us another 10, 15, 20 years into the future.
Yeah, it's exciting times. I'm really looking forward to seeing what happens post the Clarity Act passing into law. And I know it's going to take time for folks to ramp up and get going, but I'm really curious as to the new innovations, the new applications, and the creative things that are rolled out. It's just a great time to be in the industry now. Final item here I want to ask you about is what else is on your roadmap? You did touch on a few things earlier, but anything else we can expect from Grayscale?
Yeah, I think a couple of things that I would mention. Of course, going back to where we started, the Grayscale CoinDesk Crypto 5 ETF, the product that was introduced as an ETF product just this week. We're going to be spending a lot of time on investor education around that product. We do a lot of that already, but many investors just still have tons of basic questions about how to think about crypto in the context of a diversified portfolio. I have my stocks, I have my bonds, I maybe have some alternative investments like private equity or real estate. How should I think about crypto in that context? What's it correlated to? What's the right amount? How should I think about risk management over time? So the single most important thing that I'll be working on is investor education about portfolio construction, building a diversified portfolio for the future, and how something like the Crypto 5 will fit into a portfolio like that. And then beyond that, it's many of the things that you've already mentioned, Tony, staking, assets beyond Bitcoin and Ether like Solana and many of the other assets that we are excited about. Investors can anticipate a lot of Grayscale education, in person, online, on all those topics. And our goal is a simple one. We believe in the technology and the value of these assets, and that almost every portfolio, any multi-asset portfolio that's being held for growth, held for the long term, can benefit from incorporating crypto assets. And we just help investors try to understand the technology and the investment risks and all that as clearly as possible so that they are confident making an allocation to the asset class. So that's what I'm going to be working on over the coming months, just like over the last several years.
That's awesome. Well, I'm looking forward to the future updates. I'm sure we're going to do another conversation pretty soon as things are starting to heat up. It seems like the SEC is getting ready to make a lot of approvals, and congrats on the approval of the GDLC to an ETF conversion top five. I just think that's a great product. I think if I'm the average Joe and Jane out there, I'm busy, I'm working, I got life things in life, and I don't have time to go through every coin, but I can get access to those top five. That's just a great product. With crypto going mainstream, I think it's a great timing for everything.
Well said, Tony. That's exactly the idea. A single solution for the busy professional that wants to incorporate crypto in their portfolio. The Crypto 5 ETF from Grayscale and Coindesk is exactly the type of solution that we're trying to build.
Zach, as always, a pleasure. Thank you so much. Appreciate your insights. And like I said, we'll have to do another one soon.
Looking forward to it, Tony. Thank you.